All right, good morning, everyone. It is 8:59 on the morning of November 22nd, 2022, and this is my pre-market strategy session. And so today, essentially, and this is probably what I'll be looking at for the next few days, are these technical levels on the Qs. And here I've got overhead resistance at 285.44 and the bottom of the gap. Now it's not the top of the gap. 285.44 isn't the top of the gap, but I have the bottom of this gap right here put in between the 9th and the 10th of November. Got the bottom of the gap as support. And just kind of watching this play out, I am going to look for opportunities to the downside today. Looked for opportunities to the downside yesterday as well. I didn't trade yesterday. It was just a little bit too quiet. It was a really tough market to trade yesterday. Here we'll look at the 10-minute, and there's nothing really obvious to me in any of this as to which way the market was going. I mean, it looks kind of dramatic right here, but this is only a matter of, let's see, 284.58 to 281.78, a little bit more than $2.50 move there. But there's nothing like, for example, like what happened on is this Monday morning, the 18th? I think it was. Let me see. Oh, that was Friday. Yeah, I mean Friday. It was pretty obvious to me it was overbought in the pre-market and was going to go flushing down and so forth. So today, it's looking like it's going to be close to overbought in the pre-market. Let's see. Yeah, pretty close to overbought in the pre-market. I am going to look for a short setup today. So I'll keep an eye on the VIX and the Qs, relative strength indices, and when they all line up together and start moving out of oversold and out of overbought, then I will execute on a short trade today. So when the Qs are moving out of overbought, they go up into overbought and move out of overbought. At the same time, the VIX goes into oversold. Here are the relative strength indices down here, and start moving out of oversold. Then I'll pull the trigger on a short trade there. I'm expecting this gap right here, this gap that was put in. Here's the, well, I guess, technically speaking, the gap could be all the way down at 263.32, but on the chart, there's a gap between 267.76 and 276.01 that needs to come back. It needs to come back and be filled and be repaired before making its next leg up. And if that happens, it'll be really neat. We'll definitely have a bear market rally. And if we fill down here and start taking off to the upside again, we'll have a bear market rally that might even break this trend line right here. This this is a resistance line, support and resistance. And that would set the bulls free for a little while, at least, which would be encouraging. And it would also set up, let's see, let me take this off of metals. Let me go to indicators. And here's the spread. We are now making new record lows. According to the history of this chart goes back to the late 80s, I think. Yeah, here we are in February of 88, so early 88. And the yield inversion between the 10s and the 2s prior to the record low, prior to very recent history, was negative 0.699. And here we've definitely made some new lows here. So, the markets, the Qs, the equity markets, they can remain bullish. They can be bullish while this thing inverts. And this is definitely a prediction of a big old recession on the way. And markets tend to crash once this 10-2 yield inversion normalizes. Once the 10-2 yield inversion starts to go positive again, as you can see in the circled green areas right here, the the markets will roll over, will crash. So we've got some exciting times in front of us, definitely. In the meantime, again, I'm looking for this gap to fill, and 283, or was it? I think, was it 285? Yeah, 285.44 is top upside resistance for the short term. All right, then that's the way I'm playing things. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you at tomorrow morning's strategy session. I am out.